So annuities can be a useful financial tool, but how do you know which one is right for you? With so many options, understanding how to analyze annuities and choose a reputable company is crucial for securing your financial future. Because of their complexity, you may want to consider working with a wealth manager who is a CFP professional and well-versed in annuities. Also, for an in-depth review of many of the different options available, check out my video a couple of weeks ago titled Annuities: How and When to Use Them. Hi, I'm Bud Milligan, CFP professional and financial advisor with Milligan Wealth Management. Today, I'll walk you through the key factors to consider when comparing annuities and how to identify the best provider for your needs. First, let's break down the basics. Annuities come in different forms, each with unique benefits. Now, I did cover this in more detail in my last video on annuities, but here's just a quick summary of the 6 types. You have fixed annuities, variable annuities, indexed annuities, structured annuities, and there are 2 types of annuities based on when they begin payments: immediate and deferred. Now, I'm not going to go into detail on what each one of these are. Just be sure to select the type of annuity that has the type of benefits that aligns with your financial goals. Now, once you've decided on the type of annuity, the rest of this video will be on how to compare those annuities. When analyzing annuities, it's important to look beyond the basics. So here are 7 of the most important factors to consider before making a decision. The first is looking at fees and expenses. What are you really paying for? Annuities often come with fees that impact your total returns. Common costs include administrative fees, which are charged to cover the insurance company's operational costs. There's mortality and expense fees. Often found in variable annuities, these cover the risks the insurer is taking on. Investment fees, well, if you're investing in mutual fund style options within a variable annuity, there may be management fees that reduce earnings. You have rider costs. Additional features like long-term care riders or guaranteed income riders often come with extra charges. Here's a tip for you. If the fees exceed 2 to 3% annually, they may eat into your returns. Always compare the annuities and weigh the contrast between lower fees and stronger benefits. Number 2 are surrender charges. Are you locked in? Unlike stocks or mutual funds, annuities often have surrender charges, and these are penalties for withdrawing your money early. These fees typically range from 5 to 10%, and they do decrease over time. For example, if you buy an annuity with a 7-year surrender schedule, withdrawing in year 1 might incur a 7% fee, while waiting until year 6 could be a 2% fee. Here's a tip as well. If you need liquidity, look for annuities with low surrender charges or penalty-free withdrawal options. The third is liquidity options. Can you access your money? Annuities vary in terms of access to funds. Some allow free withdrawals of up to 10% per year, while others lock up your money entirely. Now, this may be a workaround if you need to access your annuity before the surrender period. Make sure you have this option if that's more important to your financial goals. If you anticipate unexpected expenses, choose an annuity that provides partial withdrawals without penalties, emergency access for medical or long-term care needs, riders that enhance liquidity and flexibility. Another tip, always read the fine print. Some annuities sound flexible, but they do come with restrictions on the withdrawals. Again, this is another reason you should consider working with a wealth manager who offers a variety of products and has a thorough understanding of annuities. A CFP professional is a fiduciary, which means we're required to give you advice that puts your best interest above ours. We will help you understand the fine print and choose appropriately. Number 4 are income guarantees. How secure are your payments? One major reason people choose annuities is for guaranteed income, but guarantees vary. Lifetime income riders offer payments as long as you live, even if your principal runs out. Period certain payouts guarantee payments for a set number of years. Joint and survivor annuities continue payments for a spouse after your passing. Now, here's a tip. If you need income security, prioritize annuities with strong payout guarantees over those with purely market-driven returns. So, when you buy an annuity with a lifetime income rider, you typically have two types of growth to keep up with, and let's call them buckets. Your underlying investment is in one bucket, and that fluctuates with the markets or an index of some type. That bucket may gain or lose value over the years and is also from where your fees are paid. There are also typically no protections against losses in this bucket, so if you ever surrender or cash in your annuity, this is what you get, minus any fees and surrender charges. Now, you have a second bucket, and we'll call that the benefit base. In fact, that's what it's called, benefit base. When you decide to take payments, your payment percentage is calculated from this benefit base. This is what's most often protected in an annuity with a lifetime income rider. That protection and guaranteed growth can provide you with a certain lifetime payment at a future date. They offer protection against losses, but potential growth based on market or indexed performance, as well as guaranteed growth rates. Number 5, growth potential. Are your earnings limited? If you are looking for growth, consider how an annuity accumulates value. Fixed annuities offer stable, predictable growth, but your fixed rates can be lower than market investments. Variable annuities allow for stock market linked growth, but come with investment risk. Indexed annuities cap earnings based on market performance. Some offer uncapped growth, while others limit returns. Structured annuities allow for market-linked growth that is most often tied to an index, with several different ways to reduce risks against losses. Like indexed annuities, these often have capped growth. And here's a tip. If market participation is important, choose variable or uncapped indexed annuities for higher earning potential. Consider structured annuities to tailor your risk protection. Number 6, tax benefits. How does the IRS treat your annuity? One of the greatest advantages of annuities is tax deferral, meaning your earnings aren't taxed until withdrawn. However, it's important to know qualified annuities, which are bought inside an IRA or 401k, follow retirement account withdrawal rules. Non-qualified annuities, bought with after-tax funds, offer tax-deferred growth, but withdrawals are taxed based on gains first. Inherited annuities have a different tax treatment for beneficiaries, so proper estate planning matters. Here's a tip. Work with a wealth manager and CFP professional to ensure your annuity aligns with your overall tax strategy. Number 7, lastly, inflation protection. Will your payments keep up? Some annuities lock in fixed payments, meaning the purchasing power of your income declines over time due to inflation. Here's a tip. If inflation is a concern, consider annuities with cost of living adjustments, or COLAs, or inflation protection riders. Now let's talk about choosing the right annuity company. Not all insurance companies are created equal. To make sure your money is safe, here are 6 things to look for in a provider. The first is financial strength ratings. Check ratings from agencies like AM Best, Moody's, and Standard & Poor's. Higher ratings mean stronger financial stability. Company reputation and history is important as well. How long has the provider been in business? What's their track record with annuities? Also consider customer service and reviews. Look at customer feedback and industry rankings for responsiveness and claims handling. Contract transparency is important. A reputable provider makes their contracts clear, straightforward, and easy to understand. And there's customization and flexibility. Do they offer riders for long-term care, legacy planning, or inflation protection? What about competitive rates? Compare their guaranteed payout rates against other providers' payout rates. An annuity is a long-term commitment, so working with a highly rated and transparent provider ensures financial security and peace of mind. Finally, there are a few red flags that you should be on the lookout for. I can't tell you how many times I've had people come into my office with an annuity that they had bought recently, years ago, it doesn't matter. Someone sold them an annuity that really didn't fit their financial goals or their strategies. So be careful. Make sure you look for certain red flags, like overly aggressive sales tactics. If an agent pressures you to buy quickly, take a step back. Confusing contract terms. If you can't understand the policy details, that's a red flag. And hidden fees. Some annuities come with excessive costs that reduce your returns. And then finally, low financial ratings. Avoid companies with weak stability ratings, as this affects their ability to pay claims. An annuity should protect your future, not create uncertainty, so it's crucial to choose wisely. Choosing the right annuity means looking beyond just the type. It requires careful analysis of fees, flexibility, income guarantees, growth potential, taxes, and inflation protection. If you are considering an annuity, be sure to compare providers side by side, read all the contract details before signing, and work with a trusted financial professional to find the right fit for your situation. They will narrow that selection down to a few that align with your needs and goals. Since this is Annuity Appreciation Month, take the time to research before making a commitment and talk with your wealth manager to find out if an annuity might be a good fit for your personal financial goals. If you found these insights helpful, please hit that like button and subscribe to my Milligan Wealth YouTube channel for more practical financial guidance. And if you have any questions or want to know more about annuities or other financial ways to manage your personal financial goals, reach out directly. Go to my website at milliganwealth.com. Navigate to the calendar icon on the left of the screen and schedule an appointment. Until next time, I'm Bud Milligan, your financial bud.